Welcome back to Stocklabs for another market recap. We just finished the third week of February, option expiration week. Really, it was the second full trading week of February, but you know, we got a partial week on the first one. So third week of February, option expiration week. It was a pretty active week. So coming in, we were looking for basically a bounce straight from Monday. Monday, Tuesday, Wednesday, market generally moved higher, which was kind of expected. And then it got a little dicey Thursday, Friday. We had Fed speakers sprinkled in throughout the week, coming off more hawkish than what the market was pricing in, coming in, or what the market has been kind of gearing itself towards most recently. We got some hot inflation data on, I think, Thursday. And Friday, we kind of continued to sell off from Thursday a little bit, although the dip got bought in the morning. And we basically closed kind of around the daily highs. So you got a little bit of I guess, a hammer from the indices. As far as the weekly performance, by the end of the week, okay, IWM outperformed, up 1.5% almost. Qs were up 0.5%, so they still had gains for the week, even though Thursday, Friday was kind of nasty. The front half of the week was, pretty strong. So Dow closed flat, down 14 bips. S&P's slightly weaker, down 0.25%. So overall, choppy week that went nowhere, but there was a wide range intra week. Crude oil, another bad week. So it seems like every time crude tries to stage a little bit of a bounce, just gets slapped down immediately. Gold did poorly. Dollar's been strong or stronger, this week, last couple weeks than it started the year. And bond market was down slightly. I think yields kind of closed. I forget the 10-year. I think it was somewhere around. I don't know. I forget. But it's kind of pressing up toward the highs from last year. It's not. I don't think it's like. It's not looking like it's going to bust loose, but it could. It's close enough to be nervous about it. So a lot of people are going to be watching the bond market. You know, at least moving forward for a little while here. Um, as for the leaders that we have in the market, that some have been doing pretty decent, right? So especially coming off kind of their lows from last year. Tesla, decent week, up 5.5%. Not sure what this was about, but made a nice move up. Apple up 1%, so better than the market, but kind of more of it's kind of more of the safer one out of all these. No one's ever going to get fired for buying Apple. Um, Nvidia up 0.5%. Netflix up 20 basis points, kind of nothing. And the rest of these, these all underperformed the NASDAQ, so it's a little bit notable. NASDAQ did close green, remember, for the week. Microsoft down 2%, so that's kind of a big divergence. Not sure what happened with them, but overall, given the strength in Tesla, it kind of dragged this whole group up, but mainly it was, if you X out Tesla, it's kind of skews slightly negative. So not a whole lot here. Industry-wise, we've got basic materials were the loser this week, down over 2%. Financials also down. They're flat, but marginally down. I've said in past recaps that these two sectors, I would not expect anything out of them this year. So, I mean, they're kind of living up to that. I mean, they're always slightly underperforming. I mean, they do get big bounce weeks sometimes, but for the most part, you can kind of forget about them. Services outperformer up 1.3%. Tech was flat. Okay, actually it was zero, but it's probably some like tiny decimal, but essentially zero flat. Utilities up 1%, pretty good. I mean, especially since bond market sold off, but given kind of the risk off back half of the week, utilities, I guess, caught a bit there or something. And consumer was up 1.5% because, economic data is coming in, pretty strong. Everyone keeps waiting for the claims numbers to really spike, or an NFP print to come in terrible, but it's just not happening. So you see all of these announcements for layoffs, and yeah, sure, there are some layoffs especially in the tech space because they overhired during kind of the pandemic years. But overall, I mean, the employment data looks good, and the rest of the economic data, I mean, the economy appears to be doing fine overall. I mean, of course, there are pockets that do better than others at any one time, but there is no big macro slowdown that anyone can really point to right now. So that is kind of causing some turbulence, right, with the uh, bond market, which is also pressuring the Nasdaq a lot. And the Nasdaq has the biggest, most widely owned stocks of all, so it gives problems to the whole market. But on an economic basis, I mean, things look fine, to be honest. So it's not a whole lot to really go off of that. Breadth on a subsector basis, um, yeah, we only had one sector that was up over 5%, toys and games. Rest, I mean, there's a decent number that are up. So, I mean, kind of reflective of the market, right? So the market, um, S&P was slightly negative, but the Russell was solidly green, right? 1.5%. So I mean, we have a decent number of, a big chunk of the market was doing fine this week. All the other cross currents aside. Downside, we've got oil and gas again leading on the downside, so down 6-7%. And that was the only kind of cut of the market that had really outsized weakness. So the rest were kind of a more normal distribution. If we look at breadth on a market cap basis, I would imagine that it's going to paint a similar picture. So we've got 1 to 5 billion cap stocks up 1.6%, basically exactly in line with the Russell. 5 to 10 billion, 1%. So a little bit worse, but still good. 50 or 10 to 50 billion, up 0.6. So that's also better than, like the S&P. 50 to 100 billion cap stocks, up 22 basis points. Again, better than the S&P, almost as good as the Nasdaq. And 100 billion cap were down 40 basis points. So the very largest stocks were down. Let's see, what do we have here? Okay, we've got some oil and gas stocks. We've got some semiconductor stocks that did poorly this week. And that's about it. I mean, all of these are kind of got more oil and gas. Yeah, I mean, the really big stuff was down. Everything else was up. So overall, breadth, you'd have to say, was pretty healthy for the week. I guess you could call it more of a consolidation week than anything, with the downside just kind of in the large cap stocks that get tossed around whenever people want to make some directional bets. But overall, people still buying stocks in this market. Even though indices didn't do much this week overall. Intelligence for this week. Kind of picture we painting here. Okay, it's looking for a bounce in financials. So financials to outperform, Bitcoin to underperform. So this inverse Bitcoin is rated bullish. We've got Gush rated bullish. So banks and oil and gas should bounce this week. Got another energy ETF, and we've got real estate, which I think sometimes real estate is lumped in with financials. I mean, they kind of trade somewhat closely at times, but so financials, oil and gas, and real estate. There have been reports, I think, that the real estate market has started to firm up again. Basically, the collapse of real estate due to rates has for sure not materialized. I mean, prices are still, I think, hanging in pretty well. Not that I check the housing market and all of this stuff very often. Okay, on the downside, we've got VIX most bearish this week. We've got cloud stocks bearish this week. We've got Boyle bearish. Kind of natural gas has been terrible. A lot of people have gotten hurt in this trying to buy the dip and whatever and all this stuff. It's just a straight line down. Inverse real estate is bearish, so kind of confirms the DRN, the bullish one on the other side. We've got some sort of natty gas sub-index thing. Gas is bearish. I mean, same thing. Metals and mining, bearish. It's a little bit interesting. I mean, generally you'll see these trade pretty closely with oil and gas, other commodity sectors. There's not often that you see a pretty big divergence between, say oil and gas moving higher and metals and mining, dropping precipitously or anything, but it could happen. I mean, so metals, I guess you could think of this maybe as the gold and silver market, even though this encompasses, aluminum, nickel, all of these things. But we'll keep an eye on the precious metal market side of this for this week. We've got the bull bond ETF is bearish, so bearish bonds, and this could be important because this is kind of the governor on the whole market. If yields bust loose, then you can kind of forget about any big rallies in the market overall, especially the Nasdaq. We've got TECS Tech Bear ETF is rated bearish, so Nasdaq should also bounce along with everything else and some uni bond thing that we don't care about. So overall, for the market, we pull back again, sort of in this area. I mean, the oscillator has not pushed down below this sort of like 2.8. What is this? This is 2.7. So 2.7, 2.8. Okay, 2.64 is the low for the year. So really, people are pretty eager to buy dips still in the market. I mean, you can even see Friday. You even saw Friday. I mean, we got that pretty severe. We got pretty severe sell-off on Thursday, and then by Friday morning, everyone was back to buying equities. So seems like people still want exposure. Again, Friday closed near the highs of the day. Not really much fear for 3-day weekend, the market being closed and all this stuff like that. I mean, it's like, the dip buying is pretty strong. I mean, the responsiveness of the dip buyers is pretty strong. 1 day down, 2 days down, they come in and buy. So I would think that for Tuesday, once the market opens back up, probably we'll see a bounce back up into Thursday's sort of range somewhere. And then where we go from there, I don't know. I mean, if the if the Thursday sell-off was for real, then we will reject, somewhere back in that range once we get in there. But if it's all kind of a head fake, then you basically see a straight shot up to, maybe even year-to-date highs um, for the next week or so. So yeah, um, overall lackluster week, for the market, choppy week, but still the bull regime is intact, for now. So there's no, I don't think there's any reason to be too fearful of the market right here. We'll see how it plays out though. Hopefully, uh, economic data keeps coming in decent, and you can just play the swings back and forth. So that's all from me. Hope you guys enjoy the long weekend if you got off on Monday too. And yeah, be back next week to see how everything went. Talk to you later.